Hello, and welcome to Explain the Charts, your go-to channel for in-depth technical analysis and market news. Today is October 8th, 2025, and we're taking a close look at Alphabet, ticker symbol Google. The stock has been on a wild ride, and we have a lot to unpack, from major legal news to critical price levels on the chart. First, let's get up to speed on the fundamental drivers. The biggest news story recently was the landmark antitrust ruling on September 3rd. The markets were bracing for a potential breakup, but the judge ruled against the most severe penalties. This was seen as a massive victory for Google, removing a huge legal overhang that had been pressuring the stock. As a direct result, the stock saw a monumental surge, adding over $230 billion to its market cap in a single day. This event also significantly boosted investor confidence in the long-term durability of Google's core search business. Following this news, analysts such as those at Wedbush raised their price targets, citing the cleared legal path. Beyond the courtroom, the narrative around Google remains heavily focused on artificial intelligence and its cloud division. The company continues to invest heavily in its Gemini suite of AI models, recently unveiling Gemini 2.5 for developers. Many investors are betting that growth in Google Cloud and AI integration will be the next major catalysts for the company. However, it's not all clear skies. There are still lingering concerns about potential economic stagnation and the ever-present threat of future regulatory scrutiny. But for now, the positive momentum from the antitrust win and AI developments seems to be the dominant theme. Now, let's pull up the daily chart to see how this news has translated into price action. Here we can see the entire picture for Google over the past year and a half. The stock has been in a clear uptrend for most of 2025, gaining roughly 30% year-to-date. Let's zoom in on the period from late August to late September to see that antitrust rulings impact more clearly. You can see this massive price gap right here on September 3rd. The stock closed around $211 the previous day and opened at over $226, an incredible overnight jump fueled entirely by that news. This gap, between roughly $212 and $225, now represents a massive area of long-term support. Following that gap up, the stock entered a powerful rally. This bullish momentum carried the price all the way to a new all-time high of $256 on September 19th. This $256 level is now the most critical resistance level for bulls to overcome. It's the psychological and technical ceiling that the stock needs to break to continue its uptrend. Since hitting that peak, the price has entered a period of consolidation and pullback. We've seen a series of lower highs and have tested a key support area several times. This is perfectly normal price behavior after such a strong run-up. The market is essentially taking a breather and digesting the recent gains. The key short-term support zone has formed between $240 and $243. Looking at the chart, we can see the price bounced off this area on September 25th, 29th, and 30th. A decisive break below $240 would be a bearish signal, suggesting a deeper correction could be underway. The next major support below that would be the top of that September 3rd gap, around $225. On the upside, immediate resistance sits around the $250 to $252 area, which has capped recent rally attempts. If the price can push through this level, it would open the door for a retest of the $256 all-time high. So, the current trading range is well-defined between roughly $240 and $252. Now let's switch to the 1-hour chart to analyze the most recent price action. Here we can see the battle between buyers and sellers more clearly. The trend on this time frame since late September has been choppy and slightly downwards. We are currently trading around $245, which is right in the middle of our defined daily range. Yesterday, on October 7th, we saw a notable drop from the $250 level down to the mid-$245s. Today's session has been relatively quiet so far, showing some consolidation after yesterday's move. The price action suggests indecision in the short term. Neither bulls nor bears have been able to take firm control over the past few days. For short-term traders, the levels to watch on the hourly chart are resistance at yesterday's high around $250.44. A break above that could signal a short-term trend reversal. On the downside, the recent low around $245.50 is the immediate support to watch. Okay, let's go back to the daily chart to recap and formulate a game plan. The long-term trend remains bullish, heavily supported by the fundamental win in the antitrust case. The recent pullback from the all-time high is healthy so far. Let's summarize the key price levels one more time. The major resistance to break is the all-time high at $256. Minor resistance stands at $250 to $252. Major support is the zone between $240 and $243. A break of this support would be a significant bearish development. The ultimate support level, the line in the sand for bulls, is the top of the news-driven gap at $225. So, what's our unbiased prediction? Let's look at two primary scenarios. The bullish scenario, which I believe has about a 60% probability, is that the stock will continue to hold the $240 to $243 support zone. After some more consolidation, strong fundamentals around AI and cloud could propel the price back through $252, leading to a retest of the $256 all-time high. A successful break above $256 would signal the continuation of the primary uptrend. The bearish scenario, with about a 40% probability, would see the price fail to hold the $240 support. A confirmed break and close below this level could trigger further selling, potentially targeting the low $230s or even a partial fill of that massive gap down to $225. This would likely require a broader market downturn or some unexpected negative news for Google. Looking ahead, keep an eye on broader market sentiment and any upcoming news regarding Gemini 2.5's adoption or new cloud partnerships. Of course, the next earnings report will be a massive catalyst and will give us a clearer picture of the company's growth trajectory. Finally, please remember that this is not financial advice. This video is for educational and informational purposes only. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.